Should you consider investing in a property in Dubai this year? The 2024 outlook of the Dubai real estate sector is reassuring. Here are the reasons. The demand for properties in Dubai is currently going up despite skyrocketing prices. The total transactions for May 2024 reached 17,539. This is a 49.2% increase from May 2023. And the total sales value had increased to 45.8 billion dirhams, which is a 33.8% rise compared to the previous year.
During the first 100 days of this year, we had about 101 billion dirhams worth of transactions. And what's significant about that number is we hit that 100 billion dirham figure 15 days earlier this year than we did last year. And I guess I'll probably also mention that we've just published our annual Destination Dubai report for the second time. And what we found is that there's $4.4 billion worth of private capital that is eyeing up real estate in Dubai from overseas. And that figure is 76% higher than it was last year.
The month of May had also witnessed 15,535 transactions in the residential sector, including apartments and villas. As for the commercial sector, it has also shown growth with 549 transactions recorded in May. And finally, 1,455 transactions were made in plots during this month.
The residential sector has done extremely well, but we have also seen really high levels of demand for office space. Indeed, Dubai, Abu Dhabi, Riyadh, maybe to a lesser extent Jeddah, these cities have virtually run out of prime grade A office space. In fact, in Dubai today, if we look at our grade A office market, the occupancy levels are well in excess of 95%. There are some buildings, in fact, that have waiting lists on them, just because we continue to see such a high level of demand from businesses either relocating to the UAE, opening new branches in the UAE, or expanding in the UAE. And this has put pressure on rents. Somewhere like the DIFC, we've seen office rents increase by 60% in the last 4 years. To around 350 dirhams a square foot. And nearby Business Bay, we've seen rents jump by 150% in the last 4 years to around 200 dirhams.
Now here are the average property prices in Dubai as of May 2024. Apartments have recorded an average price of 1.3 million dirhams, which is an 8.8% increase from May 2023. With regards to villas, the average price is 2.8 million dirhams. This is a 10.9% increase compared to the same period last year. As for the commercial, the average price is 1.5 million dirhams, which is a 49.2% increase versus May 2023. And finally, plots have recorded an average of 4.6 million dirhams, and this is a 7.4% decrease versus May 2023. Now let us take a look at Dubai's top performing areas in May 2024. Al Barsha South Fourth has recorded a 1.521 million dirhams in value and 1,547 transactions. Mohammed bin Rashid City recorded a 1.193 million dirhams in value with 1,173 transactions. Ras Al Khor Industrial First recorded a 2.443 million dirhams in value and 1,119 transactions. As for Dubai Marina, it got 3.409 million dirhams in value with 851 transactions made. And finally, Business Bay recorded 2.568 million dirhams in value and 1,073 transactions. From January to March, total transaction volumes in Dubai reached 35,310, and this is the highest total ever recorded in the first quarter of 2024. This also marks an increase of 20.5% from 2023.
For the first quarter of this year, Business Bay was the #1 area in Dubai for the highest number of residential transactions, but we see demand across the city. And what's really interesting as well, Farah, that's worth mentioning is that given the high levels of demand we're seeing for residential real estate in Dubai, we're starting to see a decline in the number of homes available for sale. So we're seeing listing volumes declining. particularly in the high-end areas where the international ultra-high net worth individuals have their attention focused. So if we take, for example, the Burj Khalifa, last year we saw a 52% decline in the number of apartments available for sale. And if we think about Dubai's prime residential neighborhoods overall, so that is the Palm Jumeirah, Jumeirah Islands, Jumeirah Bay Island, and Emirates Hills and the Palm Jumeirah, we see that there has been a 40% reduction in the number of properties available for sale in these locations, which is giving us an indication of how the nature of buyers has changed, because people are buying and staying in these properties. They're second homeowners, they're long-term residents, they're buying as a holiday home. We no longer see the buy-to-flip activity that we've seen in the past.
Knight Frank is currently tracking 77,864 homes, excluding branded residences, that are currently under construction and will be delivered by the end of 2028. So in 2024, what is the average number of houses that will be delivered this year?
So actually, Farah, that figure that you've just cited is 261,000 homes. So we've upgraded that. So it's 261,000 homes that are under construction or planned, due to be delivered over the next 6 years. Now, very crudely, if we divide that figure equally for the next 6 years, it gives us a total of 43,500 homes per year between now and the end of the next 6 years. Now, according to the Dubai Urban Master Plan, we're expecting the population to approach 8 million by 2040. Now, by our calculation, in order to accommodate a population of 7.8 million, we're going to need 70,000 homes per year for the next 16 years. So as things stand at the moment, it does look like we are underbuilding. And so that suggests that upward pressure on house prices is likely to persist. However, of course, there are other factors that will influence the behavior of house prices. And between now and the end of 2040, it's quite likely we will have gone through one, if not two more property cycles.
But just so that you're also aware, this forecast also includes some risks. The following is considered high risk, and that is the global economic slowdown. Dubai is a global economic center and is vulnerable to global economic shocks. But for now, all of the key economic indicators remain positive. As for the medium to high risk, it is the developing tensions in the Middle East. Also, the increasing oil prices could trigger an inflation, which will impact demand for real estate. High interest rates could increase the cost of borrowing. As for the low risks, it could be the oversupply, but for now, the market remains, in Knight Frank's view, as undersupplied. And that was our overview of how we expect the UAE real estate sector to perform this year. I'm Farah Heiba. Thank you for watching.